Bitcoin is becoming so much more institutional. We've recently seen that whales have increasingly been interested in putting their tokens into the ETF. We thought that as a crypto native, that would be kind of repugnant to get on the US rails. My team will actually work directly with whales. We will engage with our authorized participant partners or other third-party intermediaries to help them in-kind tokens into the product.
Talking about the future of institutional adoption and tokenization with Krista Lynch, Senior Vice President of ETF Capital Markets at Grayscale Investments. Welcome to the show, Krista. Good
Thanks
to see
so
you.
much for having me.
I am super excited to talk to you. Could you comment on the earlier event of the 10 a.m. dump? So people are speculating that every day at 10 a.m., Bitcoin would have this 2 to 3% sell-off, and then retails would pour in, and then that's the whole thing between AP and then the ETF issuers. What is that about?
Yeah, I know that there have been some theories. Twitter or X, of course, have latched onto this. I don't necessarily know what exactly drives it, but to me, there's a couple things that are indicative or significant, and that has to do with certain NAV strikes and certain other financial instruments that have important times at around that time. As an example, some of the futures for Bitcoin and other digital assets have a very important time at which their value is struck. At London's, I believe it's 10 a.m. here or 11 a.m. here. So that kind of correlates with the timeline that you're mentioning. Now, another important timeline for these products is 4 p.m. in the US. That's when NAV is struck. And you see a lot of trading activity between 3 o'clock and 4 o'clock for that reason. So I think, we do a lot of debunking of some of the theories out there, especially for Grayscale. When people see tokens moving in or out of wallets and they're speculating we're buying or selling, we're just facilitating a settlement. And my guess is that this is something similar, where those are important times for determining value that may inspire a lot of trading, but there's not a lot of deeper meaning behind it.
And there are people talking about the datas. So retail investors, they look at the inflows and outflows of Bitcoin spot ETFs, and they're like, oh, institutions are buying or selling. But there are a lot of ways to hedge against that. Could you comment on that?
Yeah, exactly. So when we have a settlement for our Bitcoin or other digital asset ETF, you can see movements of Bitcoin or whatever token it is on the blockchain coming into and out of our wallets. And like you said, people often assume that Grayscale is actively making a decision to buy or sell. We are really beholden to the end investor who seeks to buy shares, and ultimately that makes its way to an authorized participant who may create or redeem. Now, when they do that creation or redemption, my team actually will go out and buy Bitcoin or sell Bitcoin commensurate to the number of shares created or redeemed. We're not taking an active management approach. It's really just driven off of the needs of the market. Now, you also mentioned hedging, and that's an important point too. I think that as the ETFs become a financial instrument, as we like to call it, basically a bellwether representation of the asset class, and I think they've arrived at that kind of stature, they're not just used for speculative investment. They're used for institutional investment. They're used for hedging. You can go long, you can go short. And going short doesn't even necessarily mean that you think, Bitcoin is done. It's just that you're taking an investment thesis and you're applying it through the Bitcoin ETF.
I remember when I first started covering the space before Bitcoin ETFs first rolled out, the Grayscale GBTC was the gold standard for institutional adoption of securitized products. Now, at the time, people used a discount or premium to NAV as a really close indicator to sentiment.
Yes.
Can you, before we comment on that aspect, just comment on why premiums or discounts happen?
Yes.
Yeah.
Yeah, so a premium or a discount is ETFs trade in two markets. You or I would trade on the secondary market that's going into our Fidelity or Schwab accounts and buying shares. But ETFs also trade on an institutional level on the primary market. And that's when something called an authorized participant goes directly to the ETF market maker and creates new shares or removes existing shares from the market. Now, premiums and discounts happen when that secondary market price does not equal the NAV, which is the primary market price. And typically, the authorized participant, really an ETF market maker who's working with an authorized participant, will keep those two very, very tight. Now, in cases of GBTC, before it was an ETF, it did not have the primary market function. And so ETF market makers could only access one side of that market, and therefore they couldn't keep it really tight with the share price and the NAV. Now, why was that something that people tracked so heavily? It was because the premium and discount almost became an indicator of market sentiment about probability of us winning our lawsuit and being able to convert it into an ETF, because they knew that if we could convert it, that would allow this mechanism to really work as it's designed to work, and share price should become NAV. So every time there was a significant piece of news, you can see the premium or discount abruptly drop or abruptly increase as the market would digest what they thought it meant for the probability that these products would be approved for ETF form.
But even at this time, Bitcoin was a very liquid market. Why didn't arbitrageurs completely eliminate this discount or premium all the time?
Yeah, so they do now. So if you see the Bitcoin ETFs, the premiums and discounts are in the single digit bips, which is very, very small. Now, at the time before GBTC was able to uplist or turn into an ETF, that premium or discount could be like 10, 20%, which is really unheard of for ETFs. And the reason for that was because arbitrageurs could not access the primary market. They could only trade on the secondary market. So there was a surplus of shares in market that really had no outlet to be reduced.
How does centralized exchange play in this whole scene?
Yeah, I think that they are very important as an outlet to trade. So like I said, when we get a creation or a redemption, we have to go buy Bitcoin or sell Bitcoin. Now for Grayscale, we work directly bilaterally with certain trading institutions, but there are some issuers that rely on some of the exchanges as another venue for accessing that liquidity. And ultimately, we call them liquidity providers. The traders that we work with are also tied into that ecosystem. So it's very symbiotic. Whether you're trading directly with the liquidity provider, they're probably sourcing some token on these exchanges, or they're providing their own liquidity on exchange. And really all of that funnels into the very tight pricing that these ETFs are able to command.
Before we continue with the video, let's talk about today's sponsor, Delete Me. Now, there's an entire industry built around collecting and selling your personal info. Data brokers collect information such as your name, address, and phone number, then package and sell it to third parties. Delete Me is designed to help reduce that exposure. It only takes a few minutes to set up, and they handle all the work in the background. They identify where your data appears, verify those listings, and submit removal requests to hundreds of broker sites. They also keep monitoring, since these listings can come back over time. I've been using Delete Me for over 2 years now, and they have reviewed over 325 listings of my information. This saved me over 12 hours of searching and reviewing it myself. The reports show exactly what was found and what was removed, which makes the process transparent. Scan the QR code on the screen here, or go to joindeleteme.com/DavidLin, link in the description down below, and use code DavidLin for 20% off. Now back to the video.
Could you walk us through the sequence? What happens when I buy a share of Bitcoin spot ETF? What happens behind the scene?
Yeah, I love this question. This is what I spend most of my time on. So, you and other investors are going to go out and buy Bitcoin ETFs. Now, eventually there's enough market demand for an ETF market maker who is behind the scenes providing you with those shares that they are becoming short. So they're selling you the shares. They might not necessarily have them though. In order to go cover that, they need to create new shares. So they're going to work with an authorized participant, which is a institution that has certain licenses to engage directly with an issuer like Grayscale. They're going to bundle that short that they have, and they're going to come to Grayscale and say, I need to create shares to cover this short that I've established. Now, my team is going to say, okay, how many shares do you need? Translate that into a quantity of Bitcoin, and then go purchase that amount of Bitcoin in the market to actually back those shares with a commensurate amount of Bitcoin. When that all settles, the ETF market maker, through their authorized participant, is going to get those shares, and you've already gotten your shares. This is all happening under the hood, behind the scenes. You're good to go, but that will really complete the life cycle when the authorized participant delivers shares to the ETF market maker and covers their short. And they're doing this day in, day out, so we see creations and redemptions on an ongoing, continuous basis throughout the day.
And that process takes a day?
It usually takes about a day to settle, but the trade itself is very quick. It might take 5-10 minutes, and that's by design. We want to make sure that markets are not moving while the authorized participant is seeking their pricing. And as you know, very liquid markets, a piece of news can move a market a lot. So we intentionally move very quickly through this process.
Just a quick follow-up on that. I think the argument, the news that I was referring to, the argument was that there are APs that are also liquidity providers
Yes.
and
This is true.
yeah.
Okay. So to elaborate a little bit more on that, the authorized participant role is technically a U.S. broker-dealer. I think a lot of people get confused that the authorized participant is the one kind of pulling the strings and making the decision to create or redeem, but they're really more of an administrative function. The brains behind the operation is an ETF market maker. Now, a lot of ETF market makers also within their broader company have crypto trading enterprises. And so we do typically see a lot of pairing off between ETF market makers sending in orders through their authorized participant. When I go out and do that trade to buy Bitcoin, we often see their crypto desk winning that trade. And that's very much by design by that ETF market maker because they can collapse their risk that way. If you think about hedging a trade, if you have the ETF shares, you probably also want to match the Bitcoin exposure, and they can collapse their risk by winning the Bitcoin trade.
But would you see why retail investors would think that is so-called unfair? It's like, you guys are the smart money and we can't beat that.
I think potentially, but how I would refute that is the end investor benefits from it actually by getting very tight spreads in market. And what I mean by that is when you or I go to buy a Bitcoin ETF, the spread, so the bid and the ask, is typically 1 cent. That's as tight as it can possibly get. That's single digit bips. And that's very, very good pricing. Now, that's possible because the ETF market makers are able to have these efficiencies. You or I can't access the primary market, and I do think that's where a lot of these kind of theories come from. But we do ultimately benefit from it because authorized participants have to engage in huge blocks of shares that we're probably not interested in trading that much, but we benefit from their very tight spread. So it is very much an ecosystem where everyone is aligned to have the best outcome possible. And I can see where some of these theories come from, but hopefully I've debunked it.
I love that.
So Grayscale research reported that across 6 crypto sectors, including, I'll just pull them up here, they're including financials and ETFs, we have negative returns throughout quarter 1 and 2. Now, at the same time, tokenization volume increased by 245%. Wow. So tell us about these counter trends here.
Yeah, so recently I have seen the biggest themes of my conversations being more about infrastructure build than price appreciation. And I think that's kind of indicative of the maturation of the industry that we're seeing. I think instead of talking about a token that might 10x in the next few weeks or months, we're talking about what is the actual infrastructure that we're building on the blockchain. And to me, I think that speaks to what we're going to be able to build in the future. We're talking about banks potentially using stable coins. We're talking about tokenizing assets so we can trade on a 24/7 basis and bring some of the principles of digital asset investing to the mainstream US markets. So instead of it being about price appreciation, and as you noted, it can actually be prices going down in some cases, I think there's so much progress being made behind the scenes to really implement the true spirit of blockchain technology.
So of the 6 crypto sectors researched, currencies, smart contract platforms, financials, consumers, artificial intelligence, and utilities and services, which of these do you think still have the most growth potential for the remainder of the year?
So I am more token agnostic than some might be. I personally think that picking stocks or picking tokens is very, very challenging to do. So I gravitate towards index products that kind of encapsulate all of them. We do have one product that's the top 5 tokens by market cap, excluding meme coins and stable coins. And we've measured that that can actually capture 90% of the returns of the crypto market. So while some people are more into picking the right token, picking the right sector, I don't even do this with stocks. I buy the S&P 500. To me, that's kind of the analog of the S&P 500 and how I approach the investment.
I'd like to get you to react to your former boss's comments, Larry Fink, on tokenization. I'll play this on the screen as well.
I do believe we're just at the beginning of the tokenization of all assets, from real estate to equities, to bonds, across the board. BlackRock
has a $10 trillion tokenization vision, but broadly speaking, why do we need what he said, which is the tokenization of all assets.
Yeah, I don't disagree with him, especially his points that we're at the very early innings. I think, and a theme that's come up here, particularly at this conference, is the convergence of TradFi and DeFi. We're here in suits. Like, I never thought that would happen at a consensus. And to me, tokenization is kind of the continuation of that. So we were talking earlier, I see tokenization, or I see stablecoins as kind of tokenized cash. And I think that's the first place that we'll see banks and other really traditional finance institutions getting their foothold. That can next progress to tokenizing something basic, like a US equity. There you gain the benefits of digital asset features like 24/7 trading, instantaneous settlement, and we were also talking about borderless ability to invest. So if I'm in another country, but I want to buy a US equity, tokenization can really enable that. Now, I think there are naysayers that are like, this isn't that novel. It's not taking it that far. And so you bring up real estate. I think that things like that will be a very different application. I think it's going to be years before we see mainstream adoption of that. And really, that is the focus of tokenization. But I do think that eventually that's where we're going to go. But it's baby steps. We're starting with cash. We're going to get to equities, and then we'll move on to more advanced underliers.
You know how nations sometimes they want to protect how their own currency flow, where they go. How does tokenization change that?
Yeah, I had a great conversation with someone working on a payments company last night about this. I think it could threaten them in some ways. And you do see with tokenization rules about who can invest in what. Even in the US, we can't necessarily invest in all the tokenization representations of US equities. And I think that there are protections that countries will want to put in place to keep their currencies a little bit more centralized. But now you could also say that Bitcoin has broken down those barriers, because Bitcoin, of course, is a global currency. So I think regulation is needed in order to understand what can and cannot be built in certain regions. And I think that will help practitioners really move forward with confidence.
But I want to push on that a little further. In, let's say, 20 years, we look back, what would change?
Well, I think that's going to come down to geopolitics, honestly. What are countries going to be comfortable with, and what are they going to allow? I think in the most progressive of worlds, we would have one global currency, but I don't think that will get there anytime soon. There are real reasons why central banks want to, control and protect their monetary system. And so I don't necessarily see us moving to a place where countries are comfortable with widespread adoption of any currency, but I do think that we'll see more FX trading of some of these assets. We already see it in some cases with different Bitcoin, USD, Bitcoin, other currency pairs. And I could see us moving to a world where we have a more globalized currency, and then there is this need for FX trading to convert to those countries that are kind of the holdouts.
So tokenized real assets. Now, a lot of those have been sold as promises to the individual investor as retaining the ownership right to that particular asset. So let's say I like music. Okay. A Stradivari violin that is tokenized. Many people who can own tokenized shares of that violin will have a say in how the violin is used and performed. That's just one example of a real world asset. How does that translate to stocks? How does ownership work for stocks? So for the sake of argument, let's say Krista Lynch Co. has 100 shares outstanding. Yep. For the sake of argument, Bonnie owns 100 shares of your company. So she's the largest shareholder of your company. There's 100 tokenized shares on each of these shares. I own the tokenized shares. So who owns your company now?
Yeah, so there's a lot of analogs here with ETFs as well, which is the area that I work in, and that goes with the ownership rights and voting rights. Right. So, for example, ETFs have even had to grapple with this. Like, if I own shares of an ETF, do I get to vote to say that I want one of the shares within my S&P 500 of 500 shares? Do I get to make the managerial decision? And I think this is very reminiscent of that quandary that ETFs have faced. Now, there's another piece of it that goes a step further, which is in the tokenized representation, do you even own the underlying stock, or do you own an IOU? And so these are some of the regulatory issues that we're really grappling with right now to understand who owns what, who has rights to what. And I will say an analog that we see is the difference between a US ETF and some of the European ETNs or ETPs have similar I would say, technicalities. In some cases, in a European product, you actually own shares or own rights to the issuer, not the underlying assets. And so that's an analog that I study to see how that's been dealt with in other regions for traditional assets. And I think that, we spend a lot of our time looking at traditional analogs to kind of guide and opine on what we think the way should be for digital assets. So I wouldn't be surprised if there's the need for roundtables and other kind of thought leadership to look at these real world examples and help guide the path forward so there is clarity on those questions.
What is your personal view? What do you think it should be?
That's a good one. I haven't really applied enough time researching it to have a stance because I think it also has to do with the mechanics of how the product works. If you're going direct on chain, then I think there's probably more of an argument for you to be able to make that decision and have that discretion versus if you're using a system where maybe the shares are still in custody at a big financial institution and you just own the IOU, then I think that's more like the ETF model I described where potentially the institution tokenizing it and giving you that IOU should retain some more discretion just for administrative purposes.
Just another quick question. TSMC has been the biggest stock in Taiwan, and they're also trading in the US. So TSM.
Okay.
If I own TSM, do I own a piece of the company too? Or how does that work?
It depends on how it's gotten to the US. So there's something called an ADR that's a popular,
exactly that.
Right, a popular way to get US equities to other countries and vice versa. So now it really depends on the structuring. I'd have to look into the specifics of this, but my guess is that you don't actually own the underlying share. It is possible that you do. It's possible. You always have to read the prospectus. The devil's in the details. But this is another example of a wrapper. So ETFs are a wrapper, tokens are a wrapper, ADRs are a wrapper. And again, they're another way that we study how these things are actually working today in US financial systems and abroad, and how can we digitize it. There are these examples in market for us to study.
Wrappers, do they track the underlying asset? Because sometimes they trade very differently.
Right.
Sometimes, the ADR in US would be up 15%, but in Taiwan only 10. So I'm just trying to understand, because I own both.
Yep.
Yeah.
So the wrapper, if it's working the way it's supposed to, it should be perfect one-to-one matching. And that goes back to the GBTC example that we talked about earlier.
Yeah.
The premium or discount existed because it was not working the way that it was designed to work. It could not access the primary market. So therefore, there was dislocation. My guess is, in this case, since those markets are open during different times and there can be extended holidays in some Asian countries, my guess is that this happens during times when those markets are closed and the US product becomes a way to continue to express your view, even though markets in Asia are closed.
I love that.
Okay, so early April, US spot Bitcoin ETFs recorded $173.7 million in net outflows as of April 1st. Grayscale, however, the lower cost mini trust BTC attracted $10.25 million in inflows. How did Grayscale buck the trend?
We love it. So we have studied this a lot. We were very pleased to see that pattern. We believe that because we are the lowest cost vehicle in market, that we have a stickier investor base. So instead of being a lot of speculative investors who are just in it for a quick expression of inflow, outflow, we think that we get a lot of people who really have conviction on the asset class and want to be in it for the long haul. So they're less sensitive to news that might be short-lived. They stay in the product. And so even when our competitors are seeing outflows, oftentimes we see our investors sticking with us.
Is the profile different? Your investor profiles are different.
I think it could be in the sense that it, again, is kind of this more long hold. I have conviction in digital assets. I have conviction in Bitcoin type investor, as opposed to more speculative risk on, risk off, where you're trying to make a quick call and put on some sort of exposure because you think in the next 5 minutes, maybe there's going to be some way to capture value. And those flows can be very volatile. They're not necessarily sticky investors. And the low management fee, I think, really commands the investor type that is looking to be in it for the long haul.
ETH ETFs, interestingly, closed Q1 with a $769 million quarterly outflow, their worst 3-month stretch since launching. However, Grayscale's ETH the ETHE product, attracted capital despite a higher 2.5% fee.
Yeah.
What does that tell you about institutional appetite?
So one thing that differentiates our Ethereum products, especially at that time, was that we implemented staking. So our Ethereum products actually yield. They have value that they provide to investors for staking. Now, for those who don't know what staking is, I'm sure you guys know, it's basically when you put your assets to work and you're paid in kind for that kind of contribution of assets. The thing that was hard to solve for with that implementation was while you stake your assets, they're not liquid. And so if you need to be able to honor a redemption, so that would be me needing to sell Ethereum in this case to provide cash to our authorized participant, then I can't necessarily do that with staked assets. So we had to develop a very robust framework for how we could measure what is enough liquidity in the fund, how much can we stake, and really monitor that on an ongoing basis. We went to the SEC and showed them our model. So it was a long time coming to be able to implement this, and we ultimately implemented it very late last year in October. But it is a differentiator for our products. Our ETH product actually pays out a distribution, so investors get a cash distribution. Our ETH product reinvests those rewards, so it has some accruing kind of nature to it. And I think that that could be a reason why investors stuck with us during a period of outflows.
Okay, on yield, you know how there was a big debate right now currently on Wall Street between how banks can tolerate, let's say, stable coins issuing a yield. Can you, as Grayscale or any other of your peers, design a derivative product of a stable coin that has a native yield embedded? Because that would be really interesting for investors.
Yeah, so one thing we've done to give yield to our investors is actually our covered call strategies.
Okay.
So we're using options overlays in order to build yield on top of Bitcoin positions and Ethereum positions. So aside from staking, which we can do on a number of protocols we deliver in ETF form, we can also provide yield through these synthetic kind of products that are really using options overlays in order to develop that yield for investors.
Mm-hmm. And final question on this particular subject from me. Mm-hmm. Can you comment on which of the tokens on Grayscale's watch list, expanded watch list, gets an ETH wrapper this year?
Gets an ETF wrapper, yes. So we have a couple active filings right now. I won't elaborate further beyond the protocols, but sure. Hype and BNB are two that I'm keeping my eye on.
Awesome.
How do you decide which coin?
So there was a period of time where it was really dictated by regulation. You know, we had Bitcoin available to us, then we had Ethereum available to us, and then there was this explosion in the number of filings that issuers were putting in front of the SEC. And that led them to have to crank through so many filings. I think they had 90 at one point, that they developed something called the generic listing standards. Mm-hmm. And this is the framework by which issuers understand if a token can be ETP eligible. Now, that has kind of encapsulated, I'd say, about 15 different tokens at this point, but it's a growing list. And it's led us to this crossroads where you have to be selective now. Instead of it being like, okay, we can, so we will, we have to apply more discretion and be more selective about what assets we bring to market in ETF form. So we now offer 8 tokens in ETF form, soon to be several more. But to answer your question, we have a research team that does a lot of diligence on protocols, gets to meet the team. They spend years doing this. They really come up with their investment thesis and cultivate relationships, understand what the protocols are all about, and they overlay on top of the regulatory can I, they overlay that should I. And so we work in lockstep with our research team to really develop our investment thesis and push forward particular protocols.
You mentioned BNB and Hype. So Hype does not have VC. Is that like a consideration that you guys make? BNB also, it's very distributed. Mm-hmm. Do you prefer not to pick those tokens with large whales?
Not necessarily, and I think that the whale point is very interesting for the ETFs because we've recently seen, and this surprised us, we've recently seen that whales have increasingly been interested in putting their tokens into the ETF. We thought that as a crypto native, that would be kind of repugnant to get on the US rails via the ETF. But the reason that it's compelling is because if you move your token into shares format, you can oftentimes get tax planning, estate planning, the benefits that these kind of US brokerage accounts allow. You can generally also use your shares for margin and collateral, which can be also quite compelling. So we've had recent progress with actually whales wanting the ETF because then they're able to put their token into it to access some of these features.
Could you share with me, how does that work? So let's say I'm a whale of whatever token.
Yeah.
I come to you and I say I want to convert that into ETFs.
Yes, generally
Okay.
that is how it works. So behind the scenes, of course,
Yeah.
there's a lot going on. But yes, my team will actually work directly with whales. We will engage with our authorized participant partners or other third-party intermediaries to help them in-kind tokens into the product. So we talked earlier about the cash creation redemption process. Last summer, the SEC decided that it would be okay to do in-kind creation redemption. And that really opened the doors for this type of investor. Now, my team, instead of going out and trading, we will instead kind of hold the hands of all the third parties necessary to move token from a whales account into our trust and issue shares to them in response.
So for people that do not understand what this means, if you buy a share of spot ETF, you would have had to go on the market and buy a share. But now I can go to you and give you my token.
Exactly.
And that changed last year, you said.
Yes, that's right. So now you would actually be accessing the primary market. So we talked about those two markets. Primary markets are almost never available to individual investors because of this authorized participant requirement. But we have some very clever authorized participants who have opened the doors for individual investors to partner with them to do this.
Now that we have 2 years of data for Bitcoin ETFs, the spot ETF, have you noticed a correlation between outflows and inflows and the subsequent price movement? In other words, what comes first usually, the outflows and inflows of the ETF and selling of the underlying?
This is a great question and something that we studied for our staking model because we did need to explain to the SEC if you have an abrupt price change, especially in a volatile asset, is it going to lead to chaos with redemptions? And we found that, of course, there's some correlation, but it's not necessarily one that's indicative of the other. And I think that the ETFs are a really good and efficient way to express a view on risk very quickly. So you can see it go inflows quickly to outflows the next day. And I think that's because of the efficiency of the vehicle. Now, of course, when the price is going up, you typically see creation demand. When the price is going down, you typically see redemption demand. So they do generally align, but I would say one is not a leading indicator of the other. If anything, it might skew a little bit towards the price being what you see a delayed reaction to with the ETFs, but it's not like it's going to happen because you're seeing one versus the other.
If more and more Bitcoins get bought up by treasury companies, would that skew the creation redemption process? Would there be less liquidity for you to actually, use that mechanism?
We get this question a lot, especially with the cap on Bitcoin of 21 million. That's another, people say, oh no, are we going to run out of Bitcoin? And really, it should just push up the price of Bitcoin with basic supply demand, dynamics. It will not hinder the creation redemption process. It just means that buying Bitcoin might cost more, but that manifests in a higher price of Bitcoin and the NAV moves alongside that. The actual execution costs, I would not expect to be higher.
Back to tokenization, I think the debate last year we had was how do you make sure that a token represent, let's say, 1% of that real estate?
Yeah.
Is it a country that has to come out and say, okay, we are going to verify this, or what has to happen?
Yeah, I think this is one of those ambiguities that has to be solved before there can be success. I think there needs to be some sort of, rules and regulations or guidelines about how you determine the value. But this is not that dissimilar from, again, going back to traditional finance analogs. Whenever there's ambiguity about a price, like an index will have a very robust set of rules by which you determine a waterfall of pricing. And there can be instances when you challenge that price. For example, you could say, I typically price this using a Bloomberg index, but today I don't agree with that because it's this percentage away from the last trade price. Those will actually go to disputes, and we do see that system working as it's supposed to. There can be frictions, but of course healthy frictions. And I think that this is where we'll ultimately have to go with something like tokenization as well. There has to be some sort of either golden source of truth or board that can come to a consensus. So more to come on that. That's going to be one of the things necessary to make this work. But like I said, I think baby steps. We start with cash, we go to equities, ultimately we'll go to real world assets.
Is there a timeline?
I think it'll be years for real world assets. I think we already see adoption for cash right now in stablecoins. My guess is many banks are using them behind the scenes, whether they're vocal about it or not. And I think with equities, there are a number of U.S. institutions like NYSE, NASDAQ, the DTC that have come out with announcements about projects. So I think that we'll see progress on that in the coming months. I think that's right ahead of us. But how far it goes, I think it'll be a build that takes a couple years.
The Federal Reserve has had a history of buying ETFs, especially during emergencies like COVID.
Yes.
More so on the corporate bond side.
Yes.
Would you see a scenario in which a future Federal Reserve could buy Bitcoin ETFs during a distressed period?
I think it's possible. Don't say anything's impossible,
Sure.
but it seems to me like they'll still need more time to get comfortable with the asset class. But I guess, again, harping on my
Is Kevin
analogs
Warsh,
here.
Comfortable enough?
I think he's going to take a little bit more time.
Okay.
But you see pensions endowments starting to do it, and I think that that's kind of the first sign. Bitcoin is becoming so much more institutional. I think we talk to a lot of people at Grayscale who are just beginning their crypto journey. They're new to it, but here, of course, we're like, everyone should have it, everyone has it, and we just assume that's the case. So I think there is quite a continuum of investors out there, but I do think this is going to be something that eventually everyone has in their portfolio.
Is Bitcoin becoming more and more institutional and less exciting?
I hate to say less exciting, but I do think it is becoming more institutional. Just looking around the crowd today at Consensus, it's a lot more traditional banks. It's a lot more people in suits. And that's exciting in and of itself because it means that there's maturity of the asset class. Ultimately, that's going to bring more investors as we open the doors for people that were sitting on the sidelines. The ETFs were a huge part of that for people that didn't know how to open a wallet, institutions that didn't have the risk, infrastructure to manage a wallet or didn't want to build that out. So I think that while it is less exciting in some ways, I think it's very exciting in the sense that it is getting more adoption and it's getting more institutionalized.
How do you react to all these Bitcoin OGs' prediction on Bitcoin going to $1 million or, a crazy high number?
I mean, I hope they're right. I think that there are, again, supply-demand dynamics that could make that a reality. Now, $1 million is very high. I think it's going to take some time to get there. But if we look at some of the things like the $21 million cap, we look at DATs and ETFs that are buying these, we look at new investors that have come into the fold because of the ability to invest through the ETF. Those are all kind of positive tailwinds that should push the price up.
I think the solution to the problem you're talking about, making this exciting, is to institutionalize meme coins. There's a big PP stand over there.
I saw that.
With the frogs, so
yeah.
Maybe there's a partnership there. All right, well, so the future of Bitcoin and ETH this year, what do you think they go towards the end of the year?
So I think, to me, Bitcoin represents all of the above for blockchain, for Bitcoin, for other digital assets. We work with a lot of people that are new to the investment in digital asset world. And so a lot of them are just learning about Bitcoin. And I think that that's what they gravitate to. It's like they might have heard of Bitcoin and other. They're not necessarily able to go down the token spectrum yet. So to me, Bitcoin, I think, is very compelling for that reason because so many investors gravitate to it for their first experience. Now, Ethereum, I get really excited about because I think the value, or a lot of value, is in these smart contract type builds. I think that being able to use blockchain technology to improve our processes and codify, if you think about a fixed income bond, codify some of these back office functions, make things more efficient. I think that's really exciting. So to me, I think Bitcoin and Ethereum both have very bright futures, but for slightly different reasons.
Awesome.
I want to talk about Ethereum. Earlier you mentioned staked ETF. Mm-hmm. Could you elaborate or explain to my mom, how does that work? How do you stake ETH, but also get the yield? Yeah.
So we work with third-party validators a validator is basically who you are pledging. And, pledging's not the right terminology, but we'll use it here to simplify things. You're contributing your token to make the overall protocol more safe and secure. Mm-hmm. Now, as you have it pledged, it is locked up. It's not liquid. And so that is the conundrum that we face in implementing this for a very liquid product. So you're pledging your assets in order to make the greater good of the ecosystem. And in turn, you're paid in kind. So you'll actually get a deposit in your wallet of that same asset, in this case, Ethereum. Now, how we deal with that is for our ETH product, we actually monetize that. So I'll go out and trade that, raise cash, and pay that out to our investors. In the case of ETH, we will then stake that Ethereum that we've received so it compounds over time. Now, how do we deal with the illiquidity aspect of this? Through some very intense mathematical modeling, we've determined what we think should remain unstaked in the fund. and we dynamically calibrate that based on market conditions. Now, we additionally have implemented something called delayed settlement with some of our liquidity providers, where they're able to give us cash on a T+1 basis, and we will settle token to them once available. And of course, they'll charge a little bit of a spread for that, but it makes the product more efficient and allows us to get yield. So ultimately, the overall economics benefit the investor.
So can I say if everybody wants to pull out of that ETF, you're still safe?
Exactly. So we keep a portion of the fund unstaked so it's immediately liquid, and then we work with our liquidity providers on any additional top-up needs, and they would provide us with that cash in the normal course of business. So you as an investor would not experience any disruptions. We would be dealing with it on the back end.
So my final question, the institutional appeal of your products is obvious, but how would you convince a retail crowd to look into ETH or even just any of your other Bitcoin products?
Yeah, we're actually doing an event down the road today that we call Crypto Connect, and it's geared towards advisors and end clients. And our BTC and ETH products are typically a really big point of focus. They're very low-cost ways to get into Bitcoin and Ethereum. And if you look at some of the trading costs that you might face on an exchange to buy the spot representation, it can be much higher than the spreads and management fees of these products. For example, I think sometimes you can pay as much as 1.5% in order to buy or sell a token on an exchange versus a penny-wide spread to buy or sell the ETF. They also have very low management fees, and that's, of course, a compelling feature.
And it's also a way to have access to staked ETH without doing it, the staking yourself.
Exactly. And to me, I think that's very compelling. I'm not going to go out and stake my, like fractional Ethereum token, but Grayscale is able to do that and pass that on to the investor.
I would love to know your due diligence process on how quantum computer will affect Bitcoin and the AI will break smart contracts.
Yeah, this is something that's been coming up in a lot of cocktail conversations here. So I've heard competing viewpoints. I've heard some that think that that is going to be the biggest threat to Bitcoin. And then I've heard others that say these things are already happening. AI is already running. We already have these, these models in place. So I think that it's something that should be paid a lot of attention to. I don't necessarily have a thesis on if it's going to break Bitcoin or not. I hope that we get ahead of that, But I think it's something that we need to be vigilant for and something that we should be paying attention to.
How is the company dealing with it? Like, what's the internal conversation?
Yeah. I think we're definitely we're monitoring it, and something that we pay a lot of attention to is also how could that affect our service providers. So we not only need to view how it affects our immediate workforce, but how does it also affect some of our service providers like custodians, authorized participants, like could they suffer a hack? So we're getting in the weeds, not only with ourselves, but also with all of our touch points.
Earlier, we were talking about a conversation you had about Taipei, Taiwan exchange.
Yes.
What was that about?
Yeah, that was so interesting for me. I went to a roundtable that Bloomberg sponsored, and it was a way for U.S. issuers to learn about some of the incentives to bring our products overseas. And one such incentive was an innovation kind of stipulation. It seems that there's an appetite for some of these covered call products that we talked about. Now, I think that digital asset covered calls might not necessarily be the flavor that the government is looking for, but it sounds like there's a lot of encouragement for innovation and something that I think maybe we could look into pushing forward.
Okay, well, thank you, Krista. This is all the time we have.
Thank you so much.
Appreciate your time.
Thank you.
That was very insightful. Thank you.
Thanks so much.
Thank you. And do check out Grayscale Investments. We'll put the link down below.